Question 101. Which section deals with deemed income under tax law? A. Section 68. B. Section 80C. C. Section 54. D. Section 44 AD. Answer is A. Section 68. It covers unexplained cash credits and treats them as deemed income. Question 102. If a company receives unexplained share application money, it is A. Ignored. B. Exempt. C. Treated as deemed income. D. Capital gain. Answer is C. Treated as deemed income. Such unexplained capital is taxable under Section 68. Question 103. Transfer pricing documentation must be maintained if transaction value exceeds A. 1 crore rupees. B. 5 crore rupees. C. 10 crore rupees. D. 15 crore rupees. Answer is A. 1 crore rupees. Transfer pricing rules require documentation for transactions above 1 crore rupees. Question 104. Thin capitalization rules in India apply to A. Loans from residents. B. Excess interest paid to foreign-related parties. C. Interest on overdraft. D. Salary payments. Answer is B. Excess interest paid to foreign-related parties. Section 94B limits this interest deduction. Question 105. Under Section 94B, interest deduction is disallowed if it exceeds A. 20% of EBITDA. B. 30% of EBITDA. C. 50% of EBITDA. D. 60% of EBITDA. Answer is B. 30% of EBITDA. Only up to 30% is allowed as deduction for interest paid to associated enterprises. Question 106. Which of the following qualifies for strategic tax planning? A. Choosing tax-advantaged location. B. Delaying filing returns. C. Underreporting income. D. Fabricating invoices. Answer is A. Choosing tax-advantaged location. Legal strategies like this help reduce taxes ethically. Question 107. GAR stands for A. General Agreement on Accounting Rules. B. General Anti-Avoidance Rules. C. Government Authority on Audit Rules. D. Global Accounting and Assessment Rules. Answer is B. General Anti-Avoidance Rules. It targets tax avoidance in high-value arrangements. Question 108. GAR is applicable if tax benefit exceeds A. 10 lakh rupees. B. 25 lakh rupees. C. 50 lakh rupees. D. 3 crore rupees. Answer is C. 50 lakh rupees. GAR applies if the tax advantage is more than 50 lakh rupees. Question 109. Corporate restructuring, like merger, is preferred for A. Tax reduction. B. Profit sharing. C. Employee benefit. D. Dividend payout. Answer is A. Tax reduction. Restructuring can help legally reduce tax liability. Question 110. Tax holiday is available to startups under A. Section 80JJ. B. Section 80 IAC. C. Section 80 GGA. D. Section 80 CC. Answer is B. Section 80 IAC. Eligible startups get 3-year tax holiday out of 10 years. Question 111. Which of the following is not tax planning? A. Investing in ELSS. B. Hiding interest income. C. Claiming housing loan deduction. D. Using DTA provisions. Answer is B. Hiding interest income. This is illegal and considered tax evasion. Question 112. Optimal capital structure in tax planning means A. Only equity. B. Only debt. C. Mix of debt and equity. D. Zero capital. Answer is C. Mix of debt and equity. Helps minimize tax burden through interest deductions. Question 113. Which of these can be used for deferred tax planning? A. Income from agricultural land. B. Depreciation timing differences. C. Salary arrears. D. Donation to political parties. Answer is B. Depreciation timing differences. They lead to temporary differences and deferred taxes. Question 114. Which is allowed as deduction while computing book profits for MAT? A. Bonus to employees. B. Provision for income tax. C. Proposed dividend. D. Loss on revaluation. Answer is A. Bonus to employees. Actual bonuses are deductible under MAT. Question 115. Which of the following affects effective tax rate? A. CSR expenses. B. Depreciation method. C. Dividend declared. D. Audit fees. Answer is B. Depreciation method. Different depreciation leads to varying taxable profits. Question 116. Set-off of losses is allowed in the same year. A. Only capital losses. B. Only business losses. C. As per intrahead and interhead rules. D. Not allowed at all. Answer is C. As per intrahead and interhead rules. Sections 70 and 71 govern this provision. Question 117. Loss from lottery can be set off against A. Capital gains. B. Business income. C. Salary. D. None. Answer is D. None. Lottery losses cannot be set off against any income. Question 118. Exemption under Section 54 EC is available on A. Sale of land. B. Sale of gold. C. Sale of house and investment in bonds. D. Agricultural income. Answer is C. Sale of house and investment in bonds. Proceeds invested in NHAI Rec bonds qualify under 54 EC. Question 119. Deductions under Chapter 6A are not allowed under A. New tax regime. B. Old tax regime. C. Capital gains income. D. Interest income. Answer is A. New tax regime. Section 115 BAC disallows most deductions like ATC. Question 120. Which income is taxed at special rate under Income Tax Act? A. Agriculture. B. Interest from FD. C. Short-term equity capital gains. D. Salary. Answer is C. Short-term equity capital gains. Section 111 taxes it at a flat 15%. Question 121. Mr. A sold a house after 4 years and invested in NHAI bonds. What exemption can he claim? A. Section 54. B. Section 54 EC. C. Section 80C. D. Section 54F. Answer is B. Section 54 EC. LTCG on land or building is exempt if invested in NHAI or REC bonds. Question 122. Mr. B purchased a second house after selling shares. Can he claim 54 exemption? A. Yes. B. No. C. Only if house is under construction. D. Only if he lives in it. Answer is B. No. Section 54 applies only if the original asset sold is a residential house. Question 123. Mr. X owns a house used for his business. Under which head will rental income fall? A. Income from house property. B. PGBP. C. Other sources. D. Exempt. Answer is B. PGBP. If the property is used for own business, income is classified under profits and gains of business or profession. Question 124. Company A chooses debt over equity to finance a project. This helps in A. Reducing interest cost. B. Avoiding dividend payout. C. Saving tax via interest deduction. D. Increasing book profits. Answer is C. Saving tax via interest deduction. Interest on debt is tax deductible unlike dividends. Question 125. Ramesh earned 6 lakh rupees salary and 2 lakh rupees FD interest. How is his income taxed? A. Both under salary. B. Salary plus other sources. C. Salary plus capital gains. D. Fully exempt. Answer is B. Salary plus other sources. FD interest is taxed under income from other sources. Question 125. Ramesh earned 6 lakh rupees salary and 2 lakh rupees FD interest. How is his income taxed? A. Both under salary. B. Salary plus other sources. C. Salary plus capital gains. D. Fully exempt. Answer is B. Salary plus other sources. Salary is taxed under salary, FD interest under other sources. Question 126. A foreign company has a permanent establishment in India. It is taxed. A. At DTA rate only. B. Like a domestic company. C. As a non-resident individual. D. Not taxed. Answer is B. Like a domestic company. If it has a income attributable to Indian operations is taxed like an Indian company. Question 127. X Ltd decides to lease machinery instead of buying. Which tax benefit is available? A. Depreciation. B. Lease rental as expense. C. TDS deduction. D. Investment allowance. Answer is B. Lease rental as expense. Lease rentals paid are fully deductible as business expense. Question 128. ABC Ltd has book profit but no taxable income. Will it pay tax? A. No. B. Yes, under MAT. C. Only if profits greater than 1 crore rupees. D. Depends on DTA. Answer is B. Yes, under MAT. Minimum alternate tax, Section 115 JB, is applicable when book profit exists. Question 129. If loss is not filed in return within due date, carry forward is A. Allowed. B. Not allowed. C. Allowed partially. D. Up to house discretion. Answer is B. Not allowed. Except house property loss, all other losses must be filed on time to be carried forward. Question 130. Mr. Z gifted 3 lakh rupees to his friend. How much is taxable in friend's hands? A. Nil. B. 50,000 rupees. C. 3 lakh rupees. D. 2.5 lakh rupees. Answer is C. 3 lakh rupees. Any gift above 50,000 rupees from a non-relative is fully taxable under other sources. Question 131. Mr. Y, a senior citizen, earns 3 lakh rupees annually. Is he liable to file return? A. Yes. B. No. C. Only if TDS is deducted. D. Only if income is taxable. Answer is B. No. 3 lakh rupees is the basic exemption limit for senior citizens. Question 132. If a business opts for 44 AD, what is the minimum income to show? A. 6% of turnover. B. 8% of turnover. C. 6% per 8% depending on mode. D. 10% of profit. Answer is C. 6% per 8% depending on mode. 8% for cash receipts, 6% for digital mode under presumptive taxation scheme. Question 133. Which income is included while calculating tax but exempt itself? A. Lottery. B. Agriculture income. C. Short-term capital gains. D. FD interest. Answer is B. The agriculture income. It's exempt but included for rate calculation via partial integration. Question 134. A company makes donation to political party. Deduction is under A. ATG. B. ATGGC. C. ATGGB. D. Not deductible. Answer is C. ATGGB. Companies can claim deduction under Section ATGGB. Question 135. Donation in cash for 5,000 rupee to NGO allowed under ATG? A. Yes. B. No. C. Only if PAN is quoted. D. Up to 2,000 rupees only. Answer is D. Up to 2,000 rupees only. Cash donations above 2,000 rupees are not eligible for ATG deduction. Question 136. Which is not eligible for ATC deduction? A. PPF. B. Sukanya Samriddhi. C. Mutual Fund, ELSS. D. Gold ETF. Answer is D. Gold ETF. Gold ETFs are not covered under Section ATC. Question 137. TDS is deducted at 1% on purchase of immovable property exceeding A. 25 lakh rupees. B. 50 lakh rupees. C. 75 lakh rupees. D. 1 crore rupees. Answer is B. 50 lakh rupees. As per Section 194 IA, TDS applies on property above 50 lakh rupees. Question 138. Sale of jewelry is taxed as A. Business income. B. Capital gains. C. Other sources. D. Exempt. Answer is B. Capital gains. Jewelry is a capital asset, and gains are taxed accordingly. Question 139. Company X receives dividend from another Indian company. It is A. Exempt. B. Taxed at 15%. C. Fully taxable. D. Tax-free under DTA. Answer is C. Fully taxable. After abolition of DDT, dividend is taxed in recipient's hands. Question 140. Which of the following is not subject to TDS? A. Salary. B. Interest on FD. C. Agriculture income. D. Rent. Answer is C. Agriculture income. It is exempt and no TDS is applicable. Question 141. GST stands for A. Goods and Supply Tax. B. Goods and Services Tax. C. General Sales Tax. D. Government Services Tax. Answer is B. Goods and Services Tax. It's a comprehensive indirect tax on supply of goods and services. Question 142. GST came into effect in India on A. 1st April 2016. B. 1st July 2017. C. 15th August 2017. D. 1st April 2018. Answer is B. 1st July 2017. That's the official rollout date of GST. Question 143. Which tax was subsumed by GST? A. Income tax. B. Excise duty. C. Capital gains tax. D. Security transaction tax. Answer is B. Excise duty. GST replaced excise, service tax, VAT and many other indirect taxes. Question 144. GST is collected by A. RBI. B. State governments only. C. Central and state governments. D. Local bodies. Answer is C. Central and state governments. GST is dual, CGST by center, SGST by state. Question 145. Which of the following is taxed under IGST? A. Intrastate supply. B. Interstate supply. C. Agriculture produce. D. Income from profession. Answer is B. Interstate supply. IGST applies to interstate and import-export transactions. Question 146. GST is A. Origin-based tax. B. Production-based tax. C. Destination-based tax. D. State-determined tax. Answer is C. Destination-based tax. It's charged where goods or services are consumed. Question 147. Composition scheme in GST is for A. Small taxpayers. B. MNCs. C. Exporters. D. Tax consultants. Answer is A. Small taxpayers. Those with turnover up to 1.5 crore rupees can opt for simplified compliance. Question 148. GST number is known as A. GIN. B. TIN. C. GSTIN. D. PAN. Answer is C. GSTIN. A unique 15-digit code allotted to every GST-registered taxpayer. Question 149. Filing of GST returns is A. Optional. B. Once in 6 months. C. Quarterly or monthly. D. Annual only. Answer is C. Quarterly or monthly. Depending on turnover and scheme, returns can be filed monthly or quarterly. Question 150. Which form is used for monthly GST return? A. GSTR1. B. GSTR3B. C. GSTR2A. D. GSTR9. Answer is B. GSTR3B. It's a monthly summary return filed by regular taxpayers.